Hi, this is Stuart Cooper. Welcome to my mortgage market update for October 19th, 2022. So today we're going to talk about where rates are currently at and where they're possibly headed based on how I'm doing my current forecasting. And I also want to talk to you about something unique and new that I haven't really brought up, and that is the national debt. So right now we're looking at the national debt of $15,773,000,000,000. But that's not our true debt. That was the national debt 10 years ago, exactly to the day. $15,773,000,000,000 was the debt. So what we're going to do here is I want to go to today and just to kind of tell you what it is. So its current debt today is 31,153,000,000,000 and 574 million, and increasing every single second of every day. So it's almost doubled, not quite, but the national debt is absolutely catastrophic for the US economy. And if you put it in perspective, that's for if you were to break down the debt and split it up between every taxpayer in the US, did you know it's $247,325? That's how much the government has overspent on your behalf. That is absolutely crazy. And to put it in other perspective, if you look at the gross domestic product, and that is all the goods and services sold in the US in a calendar year, is 24,803,000,000,000, right? 24 billion or 24,803,000,000,000. So that just puts things in perspective exactly how high our national debt is and why it's affecting interest rates, because the government has basically printed too much money over the last few years and now it's fueling the inflation. So let's go ahead and talk about what rates are doing. Okay, so let's take a look at what interest rates are doing this week. And this is a great website. It's called Mortgage News Daily. It's been around for years, and it's more of a website for loan officers to go to. And but it has so much good information that if you really want to dig deep about what's going on with the mortgage industry, this is one of the best websites I've ever come across. But so today it says today's mortgage rates, right? You can see the 30-year fixed rate 7.22, 15-year, 30-year jumbo 6.15. So what you notice is that the jumbo pricing is actually considerably lower than the conforming fixed rates today by about a point. But there's something that I want to share with you, okay? So when you're doing your due diligence and you're doing your research, you really need to talk to lenders and give them the exact specifications of what kind of borrower you're doing, what kind of property you're buying, because the numbers here are a little bit misleading. So let's see here, it says 7.22. Well, those numbers could dramatically lower depending on your situation. So maybe you're putting down, 30%. Maybe you have an 860 FICO score or 780 FICO score and you're buying a single family residence. So you might actually get a lot better pricing than what's being illustrated here. For example, I did some pricing earlier this week on a conforming loan 30-year fixed rate. Here's a rate 5.625 at one point with an APR of 5.76. So you can see that's considerably lower. That's based on a 20% down and like a 760 FICO score, but definitely it's in the fives, not the sevens. And then when it comes to the jumbo money, 30-year fixed jumbo, and of course this is based on about a 760 FICO score, I believe, and with 20% down, you're looking at a rate of about 5.75 at 7/8 cost and an APR of 5.866. So dramatically lower. So you want to do your due diligence when you're doing research for your interest rates, but you want to definitely talk to a few different lenders because there is going to be a difference out there. So don't just go off of this and think rates are 7%, because depending on your situation, they could be a lot lower or they could possibly be higher. So let's jump gears and let's talk about what's going on with mortgage-backed securities or the 10-year treasury on where I think rates are headed this week or the next couple weeks. Okay, so now we're looking at MBS Live. This is the current 10-year treasury, and you can see here we're at 4.125 is the new level. A few weeks ago, I did forecast that we are expecting for rates to continue to increase, and they have done exactly what I thought. And of course, we never know for absolute certainty. There's a lot of things in the market that can change things, but right now the general projection is that rates are going to continue to increase. I know there's a lot of people out there saying rates could get better next year. They could. They also could get worse. There's a lot of different variables, so I don't want to try to forecast that far out because there's a lot of things that can happen between now and next year that could actually help interest rates or actually make rates a lot worse. But right now we're at 4.125. I do believe that there's not a lot of catalysts to slow us down from rates getting worse. If I go out to this all-time graph, I do see a potential for rates to actually increase where the yield goes to about 5.3, 5.2, where I'm drawing this line right here, because that would be probably the next support level or barrier. But we'll probably trade between here and that higher range over the next couple weeks, and that's what I expect. So let's take a look at my NBS dashboard. So what you're seeing right now is we're actually seeing in real time the pricing fluctuations in the market changing, and you can see that we're getting an NBS live update report that's telling us that most likely there's going to be price concessions or price changes throughout the U.S. and Blockdesk will be adjusting their pricing accordingly. So usually when we get these red alerts like that, it's telling us that, hey, rates are about to deteriorate. You want to get your rates locked in before we get repriced at the worst case scenario, which literally could save you, thousands of dollars on your lock. So that's why it's so important to work with someone that has access to this type of information. So a quick recap. Rates are going to further deteriorate, most likely. That's my expectations. Of course, there's no crystal ball. Market could fluctuate. Market could get better. But the general census is right now, from my opinion and my research and my experience, is that rates are going to further deteriorate for the foreseeable short future. And then we'll do another video and adjust it if anything changes. So with that said, I hope you have a great day. If you like my YouTube channel, please subscribe because I love your support. And I hope you have a great week.